It's Phumlani Majosi, the author of Lessons from Past Heroes. This is the Phumlani Majosi show. We are speaking the budget today. No, we are not going to talk Donald Trump's meeting with Ramaphosa yesterday in Washington. No, we're not going to do that. we will talk about the budget that has been ignored by many. Joining me now is Jonathan Katzenellenbogen. He is an economics columnist. It's the second time that he is here on the show. Here now, we spoke about, was it the second version of the budget?
Yeah, it was
Jonathan?
the second version of the budget. Yeah, the more budgets there are, the more we see each other.
Yeah. And then this was, the third iteration of the budget,
Yes.
Jonathan. After, a battle, right, in the coalition government, really pushbacks left and right. It was a struggle. And then some people say some parties would say you have, parties like the DA saying they won the battle, the ANC say they won the battle. We have different parties saying that within the coalition government, saying that they were the winners. Even some of the parties who are not in the coalition government saying, look, it was us who had to make an influence that we don't see the VAT increase. Who won this from a political perspective, in your view?
Well, I think that the opposition parties did, and it was the DA. They halted the second version. For us to never in this country's history has the budget gone to version 3.0. It really makes for a record. And who knows, in future budgets with coalition governments, we might go into further reiterations along the way. But I think it's the opposition. They got out the VAT increase. And I think they proved that the VAT increase wasn't required and that it was, you got a better budget without the VAT increase. And besides, the VAT increase was politically infeasible. And the ANC didn't realize that and had to be brought to its senses. I think it's historic in many ways. And I know that the deputy DA, Minister of Finance, and Ashur Sarupen and Mark Burke, who is the DA's finance spokesperson in Parliament, played a large role in this. The ANC just couldn't have it go to a fourth iteration. They had to get the deal now. Going to a fourth iteration of the budget would have shown that they're not a lack of seriousness and in their ability to negotiate. So it's a relief that it's passed, and I think that the rand strengthened slightly. I think it was at 17.92 just prior to the budget and 17.85 just after the budget. But there was a bit of dollar weakness there. And also, I suppose the markets must have been awaiting the outcome of the Ramaphosa-Trump meeting. So it's not a bad outcome at all.
It's not a bad outcome at all. Now, the business...
No.
Yeah. So Business Day wrote an editorial just before the budget, where they argued, I think it was, just before the budget, where they argued that, look, the ANC is now coming to reality. They are facing the reality that they are not alone in the governance of the country, that they have to factor in other coalition partners. They've spent the past 10 months or so refusing to share power, Jonathan, right? You and I have spoken about this before. Many people have been complaining about that. I am one of those people who have been complaining about that. Business Day, the editorial, they are saying that the ANC is now facing the reality. They are deciding to face the reality that they have to share power. In your view, is this the beginning where the ANC will, going forward, say we have to share power?
Well, it's the beginning, perhaps over the budget, and you must remember the budget is a bit of an exception, but it's absolutely central. Without a budget being passed, the ANC really can't stay in power. So had the budget not been passed, I think the GNU would have been split apart, and we would have gone down the road in time. The election would have been called at the earliest constitutionally allowed time, which I think would have to wait a number of years. But there we are. We'd have to, it would be a political crisis. But they got the deal done, and it's very important. But this is separate from other areas. In the case of the budget, you have essentially technocrats, the Treasury civil servants, who are not as ideological, and they're more technocrats than the civil servants in other departments. So it's sort of a different case, and so I think they could be more accommodating to the DA, but they also had to be more accommodating to the DA and the opposition. But I doubt whether this sort of power sharing is going to take place in other areas like foreign policy. I just don't. I just don't see that happening. Defense, policing, and those sorts of politically sensitive areas. I just don't see that happening there.
Now let's talk about how was this budget different from the previous one. You seem, when I listen to you, you seem to say that this one was better. This one was kind of a positive in contrast to the previous two iterations. How was this one different in your perspective? How is this one better?
Well, I think above all, not having the VAT increases was very important. I think they were unnecessary. They would have financed an increase in spending, but their question is, did we really need that increase in spending? But the adjustments that they made were pretty marginal, really. But they managed to come through on it without the VAT increase, questioning whether they needed that extra revenue for the VAT increase. They needed it to pay down debt. That would be a positive, helping lower debt. But I think we would have acted as, higher taxes are a drag on the economy, let's face it. But so it was slightly different. You had the budget deficit is coming in. The background to this, I'll start there, is that we have markedly slower growth. Okay, GDP growth is down from we only had 0.7% growth last year. Okay, so they thought they'd get a 1.4% growth this year. The Treasury did in its last budget reiteration, but 1.9%, 2%.
Yeah.
But they're half a percentage point lower at 1.5%. So that means lower revenue and higher debt to GDP ratio, and that's gone up. So the gross debt as the deficit will be 4.8% versus 4.6% in the earlier projection, and we have gross debt at 77.4% in 2025, as opposed to a slightly lower 76% back at budget 2.0 as it's now.
Yeah. So, and then now let's talk about the fuel levy, right? The fuel levy went up. There was an increase.
Yes.
The first increase in 3 years, right? Some people are saying, that's going to translate to the rise in costs, for consumers in some form or another, right? Was the fuel levy increase necessary? Answer that to me, and then we'll come to government spending.
Well, they say it's an inflationary-related increase, and it's not in real terms. But even so, I think it is going to feed into higher costs and inflation, and there could be debates as to whether it's really necessary or not. But they like taxing. Fuel is an easy item to tax. So they went for it, but I'm surprised that even though it's a inflationary related to inflation, I'm surprised that the DA just allowed us to sail through. Perhaps, it was taken as oh, it's not a tax, it's rather a levy, but it's a tax, and it's a consumption tax. And it's a threat to, who's hit hardest by that, and that's lower income groups. But yeah, they're objecting to that, but they don't say anything about this fuel levy. Perhaps there was some sort of deal under this, but I suppose if the ANC argued that we have to do this because of it's inflationary adjusted, then they might have just passed on this one. I don't know what happened, but my own sense is that they should have protested against this. The fuel levy is a tax, and they said no new taxes, and they've let this one pass.
They let this one pass. You are saying now. Some people say, Jonathan, that look, we may be in this process of trying to suppress any tax increases, right? This idea that we shouldn't increase corporate tax rates, income tax rates, VAT, and so on. But we are pushing this down the road. We are delaying this. There will be a point later where there will have to be tax increases in order to sort out our fiscal situation, especially given that we have a government that really does not like cutting spending, government spending. They don't want to do that. They don't want to deal with the
no. And that's what they have. And I think if they could face, I know you agree on this, but if they faced up to the reality that you can't solve every problem with government spending, and they got used to the idea of cuts, things would be a lot more positive. But the minister said they're going to have to start thinking about tax increases for next year. Now, that raises the question, what is the DA and the other opposition parties going to do about this? Is this going to be the DA will reject any VAT increase, but would it go with an income tax increase? That would be a bad idea. Where the South African taxpayers are already squeezed at high marginal rates, and it would just be negative in every single way to raise taxes. There have to be many avenues to tax. The big item on the budget is, of course, procurement, and they've got to find ways of exercising far better control over procurement. There's the BEE premium, which they've admitted to, that BEE companies are allowed to pay quite a hefty margin over what other companies are allowed to. BEE companies won't be penalized if they charge over a certain percentage point of other percentage over other bidders on contracts. So, if they could address, I think, the BE premium issue and see what can come out of that, and I'm sure that it's quite significant. And they've got to get the idea of other deep cuts in taxation. They do say that they're going to, I think it was at the instigation of the DA, they are going to go through a spending review. And let's hope that something comes out of this. But they've got to get used to the idea of heavy cuts in tax, heavy cuts in spending.
In spending. Now, two things. Well, one thing I want to highlight, I want to get your opinion. Your opinion here. Many people are talking about this. The analysts, writers, and so on, economists, and so and others, and even government, officials, and that is part of what needs to be done. In fact, I believe the government is already in the process of doing that, and that is to improve the South African revenue services, collection process, right? The whole mechanisms to collect taxes, to ensure that it is efficient, that it can collect what it should be collecting, right? Do you agree with that? That fixing SARS will help.
Yes. They're going to spend more on SARS. SARS has a a heavy increase to focus on collection and enforcement, which is positive, rather than raising new taxes. And this is what the SARS, in fact, wanted. The head of SARS said he didn't want any tax increases. And the minister, Minister Godongwana, accused him of stepping on his toes because he said policy is my area. As minister, just collecting taxes is yours. But this is so there was a bit of a row, as you may recall, a few months ago. But it's a matter of collecting. They have the tax. That if they collected on these taxes that they have already, we would see better spending. And this is what they wanted, and they got an increase in revenue for that. So that's one of the fairly significant increases in spending for this coming for this financial year.
Now, you said something very interesting earlier. You said that you can't solve every problem with government spending, right? Now, there are many people out there, Jonathan, who strongly believe in government spending, right? It's been a debate for decades now as to what works better, right? Is it for government to keep on spending, or maybe to reduce the size of government and its spending, right? We have many people in South Africa, including politicians, who believe in the idea that government spending is the way to address our problems. Explain to us why continuous increasing government spending really isn't the solution to our problems, at least in the country.
Yes, certainly. Well, the solution to poverty is not more grants to get people, to sustain people above a certain living standard. Admittedly, grants are important, and there'll always be people who require some sort of assistance. I mean, that is certainly the case, but we would be able to reduce the burden of grants on government spending if we pursued pro-growth policies. I mean, there's a direct relationship between growth and employment. If people have jobs, they don't need grants. And if we targeted policy at growth and employment creation, I think we'd be far better off. That would be solving problems. And here you would ease the investment regime, ease the labor laws. You'd have to get rid of the public enterprises, which are just a burden on the economy. Eskom, Transnet. Transnet is a disaster area, and their attempts to turn.
But are they not trying to reform it right now with this recovery?
Well, what they're trying to do is to concession off various rail lines to the private sector. All well and good, but they're going to have to operate under the same burdensome type of regulations of employment equity legislation and a whole lot of others. The whole heavy South African regime, which of investment deterrence, really. So that you might well end up in having poorly managed concessions, because they just can't. If they're told who you can buy the rolling stock from and not manage it as a proper private enterprise, I think it's just going to be a disaster. And I think government wants to maintain, the ANC rather, wants to maintain control over the activities of state enterprises, although they say we'll put it under the private sector, concession it off. They will still want to maintain control. So I think their friends can get contracts, maybe. I think that, it's just deeply problematic. The two don't go together. I think they've really got to go ahead with complete privatization. Now, we're in this never land of, but we're in betwixt and between. because the Godongwana doesn't want to bail out any state enterprises, and significantly, there was nothing in this budget for a bailout of the state enterprises. But they're collapsing. Denel is collapsing. They can't do the basic work, and the state enterprises are essentially the bedrock of the economy. Basic logistics and transport, Transnet, Eskom, Denel making weapons, SABC, and you can go on and on. They're all most of them are at critical growth points, which constrict the growth of our economy.
Yeah.
And I think if so, this isn't about spending. This is about privatizing. It's about deregulation, and I think it's really
and tax cuts, right? And tax cuts, right?
Things and like tax cuts, yes.
Yeah.
I think this country, we have to come up with a growth story. Say to investors, this is a growth story. We're privatizing, we're cutting taxes, we're making it easier for you to invest. We're getting rid of BE laws, which make things complicated and difficult. We're changing. Come and have a look at South Africa as an investment destination for Africa. And I think you've got a story there.
Yeah. Now, quick question before we move to spending. I keep on delaying the spending segment of our discussion. So last year the growth was 0.6%. Last year
0.7. I heard no. What is it? 0.7. Yeah, it's below 1%.
Something like that. Yeah, and then
it's below our population growth rate.
So
we're declining.
And that's very bad. Now this year they are saying that, well, they were in the first budget they said 1.9%, right? And then now with this week, this third version of the budget, they're saying it should be 1.4%, right, or something like that. But so
the growth rate in the latest budget is 1.4%, correct? Yes, down from 1.9.
Yeah, down from 1.9. My question is this, Jonathan: what made them to believe that we will jump from 0.67% of last year to close to 2% this year, right? Or even to 1.4%, which is their new number they've given up. What made them to come to that conclusion?
Look,
what will cause the increase? What will cause the increase?
Look, a number of things. I think to give them a bit of credit, things were looking. The world economy was looking far better than it now looks. Just 3-4 months ago. Then Trump comes in with his tariffs, and there's a lot of nervousness. The IMF has cut its forecast. The 1.9% even seemed very, very high to a lot of economists. I just don't know what drove them to do that. If you have a higher growth rate, you have a lower debt to GDP ratio, and it's when private companies may massage their accounts. The term for it is window dressing. I think there might have been a degree of window dressing here, but to give the Treasury the credit, things were looking a lot better.
But Jonathan, what you talk about was the global macro environment.
Yes.
Is there any domestic sort of trends that they looked at and therefore concluded that there will be a contributor to this big jump from 0.6%?
There was.
Is anything local?
Load shedding. They thought there'd be an absolute end to load shedding.
Okay, load shedding. Okay.
And then they only warned, in the Ministry of Electricity, I think, only warned about potential load shedding, and there were a number of incidents then. And so that sparked some. That must have sparked some nervousness in the cut, because power is absolutely key. I think 2 years ago, someone came up with the projection that if we had no load shedding, we'd get an extra 2 percentage points in GDP growth. So that could have been significant. They looked at ESCOM and they got a bit nervous over that. Then also, Transnet remains a disaster. I don't think the turnaround and the concessions are being taken up fast enough to really fundamentally change the growth picture yet. Those are the two big constraints on our economy. And you know what? There are a number of big corporates who are sitting on the piles of cash on their balance sheets. And the reason they give for this is that they say, we can't go ahead and make big investments in SA when there's a big problem with Transnet. It's a constraint. We're not going to be able to export. So we can't be irresponsible with our shareholders' money and go ahead and invest just yet.
Yeah. Remember, I'm speaking to Jonathan Katzenellenbogen. He is a columnist. He writes on economics and politics for the Daily Friend. And you do get published on other platforms as well, right, Jonathan?
Yes. It's the Daily Friend articles are picked up by others like Biz News.
We are like Biz News.
And others.
And others. Yeah. So now let's speak about, because there was, this budget, right? Where are the cuts, right? The spending cuts, where are they? Because I saw that spending will be reduced by 200 billion rands over the medium term to the 3-year term. But is that enough government spending reduction? How do you see government spending in this budget? We've spoken about taxes and other things, but in terms of spending, are they serious about spending cuts, or they are just trying to save face? What's going on here?
So what these are? They're cuts in planned increases in spending. Okay. So they cut the planned increase in spending on infrastructure, which still remains substantial, the increase in infrastructure, which we desperately need. And they've also cut the increases in frontline services. So unfortunately, health and policing and other services, which are absolutely crucial. And they've cut the increase that was to be given in grants. So there's no inflationary increase in most of the grants. So that's where the cuts have come, and they're quite substantial. They're quite substantial cuts. I think instead of spending around over close to 300 billion, as in January, an increase in 300 billion. They'll just over 3 years, it'll just be 74 billion. So that's where the cuts have come.
Now, before we close off this discussion on the budget, I want to ask you a very quick question. So, in your judgment, are you saying that this budget was better than the previous two versions? Is that what we are saying here?
Yes.
So this was better.
Yes. Look, this was better, but our growth remains. But the problem is the growth rate has deteriorated. Therefore, our debt metrics have been set back. So debt to GDP will increase under the Treasury projections. But I think it's they're cutting the increases. They're doing some cutting, albeit of increases, not really into spending. But they're also looking at they're going to have an expenditure review. Okay, which I think is significant. If it's going to be produced by Treasury, it won't be I say this with caution, a heavily political document, and I think one can expect an objective assessment of where cuts can be made. So I think it's positive in that sense, yes. And also I think that government, instead of increasing spending on consumption, by the way, they've still got to meet one of the spending increases that is locked in, of course, is the increase in salaries for the civil service, which they can't get out of because it's a 3-year wage deal. So, that's locked in. But they can, they've tackled other areas. And one of the areas, the frontline services, one wants resources to go to infrastructure because that is an investment in the future of the economy. Yeah. And it is increasing. They've heavily increased infrastructure spending. But one also wants resources to be managed more effectively. And the problem with, we spend a lot on health and education, but everyone says, from the IMF to independent assessments, we don't get a lot of bang for the buck on spending on health and education.
That's true. Yeah, I've heard that. Now, quick one. Let's talk about inflation. Numbers were out this week. The numbers for April, this is April inflation, and the annual consumer price inflation was 2.8% in April. This was last month. This was up from 2.7% in March. This year. I'm looking at a very interesting chart here, Jonathan, by Stats SA. You can see after 2020, from 2020, inflation was rising, right? It's a speedy rise, a steep slope up until about 2022, right? So it rose to close to 8% inflation. And then from 2022, it's been going down, from the peak of about 8%, of course. It's been going down. It's now at 2.8%. This chart, it's a very interesting one because it also shows inflation back in 2009, where it was at some point above 8%. How do you see South Africa's inflation? Is this something that is under control? Milton Friedman was very much an economist who believed in them, who studied a lot on inflation, and he was always concerned about inflation. Have we got this under control? Is it under control in South Africa? Inflation?
And very justifiably, yes, I think it is. And it might be too. The Reserve Bank might, in fact, be too tough in its monetary policy stance.
You think so? We're not the first one to say that. That they're just too conservative.
Because hang on. The target range is 3 to 6%, which means that they should be in an ideal world. They should hit the 4.5%, which lies in the middle, smack bang in the middle of that. But they're at 2.8%, which is under that. In an economy that is growing, you're always going to have some sort of a bit of inflation with that. It's a natural process, and you've got to let it happen because prices are going to rise in a growing economy as there's short supplies. If there's a building boom, we'd like one in South Africa, there's a building boom, the price of cement and bricks will rise as the producers of bricks and cement will take time to catch up with their increases in production. They can't bring it in, the increase in production on overnight. So we are 2.8%. Is the Reserve Bank being too tough? And next month, actually, the projection from most economists is for a sort of a very similar inflation reading. So now there's been discussion as to whether we should, in fact, lower the inflation target. I think it's a technical discussion. I don't really have an opinion on it, but and I think that we've been between 4 and 6% since for many, many years now. And it's a reasonable rate. One question is, of course, whether the CPI index captures everything that it should. because I think over the past 18 months, 2 years, 18 months, anyway, since the end of the COVID epidemic, one feels at least that one's shopping basket is shrinking for what one pays.
People have said that, yeah.
But the post-COVID surge was, one would hope, a one-time event, which led to these inflationary problems, which are subsequently addressed. And remember, I think that South Africa has to have a tighter monetary policy than it would otherwise have, because to maintain confidence in, one, the central bank, and two, make sure that inflation is solidly under control. And I think it has to be tighter than it would normally have. We want to beat other emerging markets in terms of our inflation rate. That gives us, that means we're a well-managed economy if we can demonstrate this. And I think it often means they have to run a monetary policy that is tighter than it would otherwise be.
So, quick one, Jonathan. We have 2 minutes left. Quickly. So the Reserve Bank will meet next week for their MPC meeting.
Yes.
We've seen these numbers of what we saw, the inflation we saw this week. Would you advise them to cut the rates next week or to keep them where they are?
They have access to a lot more information than I do, but I think keep as they are. Don't lower them because
unchanged.
I think what they're nervous about is that with the Trump administration raising tariffs by the basic rate of 10% for everybody, I think they're worried, and justifiably so, about inflation. And while we haven't raised our tariffs, I think the fear is that the US raising its tariffs, although it's reached a deal with China, it just brings it down to they still face a tariff increase. It's not of the the extraordinary magnitude that what it was, but everyone faces that 10%, and I think that one doesn't know the inflationary consequences of that. There have to be some, and it has to be, considering the US's role in the globe, it has to be a weight in the world economy. It has to be a global problem, and I think the Reserve Bank are probably are worried about that.
Yeah, fantastic. Jonathan, wonderful to talk to you, sir. Thanks for coming back on the show. We always do enjoy your insights on economics and policy and politics. Jonathan Katzenellenbogen, and great honor to be here and to talk to you, my subscribers. Remember, to those who haven't subscribed to the show, please do subscribe. We talk economics and politics with people like Jonathan. We'll chat soon.
Thanks very much.